Good evening. This is the video newsletter for buysellshort.com for Monday, October 20th. Looks like we were right on our market call yesterday, and then the trading alert I sent out this morning saying that the Dow 15-minute chart was flashing its first buy signal in many weeks. We had what's called a golden cross on the 15-minute chart, as you can see right here. That is when the 50-day moving average crosses up through the 200-day moving average, and it is typically a very bullish event, especially on the 15-minute chart. As you can see, we've had a lot of difficulty with this 200-day moving average over the last several weeks, and we continue to hold above it. And we were also able to hold above the 50-day moving average this morning, so this looks really good. And then to add more positive to the mix, we closed above the downtrend line for the first time since early October. Things look really good here, especially on this chart, for a move at least to 96 to 9800. So that's about a 5+% upside move. Technicals look really good on it. If we actually flip over to the daily chart, we're right at the upper limit of the bullish falling wedge. Breakout would be 93.50 with a confirmation, a move above the 20-day exponential. Right now that's at 96.75, would probably in the next day or two drop to 96.25 to 50. RSI is trending higher. We're about to get a positive MACD crossover, the first time since August. Stochastics, we're about ready to break this downtrend line that's been in place since August as well. So things are shaping up pretty damn good. We're starting to follow as I mentioned in the video yesterday, go back, check out the chart for the Dow from September through December of 2001 for an idea where we're going. At least the 50-day moving average is the target by December. Back in 2001, we actually rallied all the way back to the 200-day moving average. That's way up there. It'd be nice if we did get back there, but let's just shoot for the 50-day moving average by the end of the year. So we've got 2 months to rally, 1,500 points. So not asking too much. USO, we had sent a trading alert out this morning, was mentioned in the video yesterday. The chart was looking to turn. And the last time we had technicals set up this way, we had about a 20% move. That was back in mid-September. We went from 73 on the USO to 89. Right now, we're looking for a move back to around 68 to 70. So as a play on that, there was a lot of volume in the USO 67 calls today, $3.40. So that was a trading alert this morning. Really small because I believe long-term oil is going way lower. But as a technical play, especially with the market looking to bounce, USO 67 calls, minimal cash outlay, upside 50% target is what we're looking for on the USO. SMH looks pretty good. It was down in after hours. Texas Instruments came out and warned. Big friggin' surprise there. Every semiconductor stock has given disappointing earnings or warned, and all the analysts have downgraded it. So that might be the final shoe to drop on the SMH, meaning that should be it. I'm thinking any dip tomorrow, especially if we're going to be rallying, that will be it. The SMH low that we called and rode back in March, Texas Instruments was actually back then too, the last one to warn, and then the SMH went up 30+%, I believe. Actually, this was it back here, if I remember correctly, and we ran from about 28 to 34, so actually maybe 20% was the rally back then. VIX, big downside move on the VIX today. The VIX is about to break down, which is also a positive for the market. We're about to break the 20-day exponential, and as I said, if we follow the September 2001 move in the Dow and in the VIX, we're looking at a move back down to the low 30s, upper 20s pretty damn quickly. So things are looking pretty good on the major indice charts. QQQs, bullish falling wedge in place here. Resistance is 35. That's where our target would be on, at least for the next few days on this one. We're in the QQQ January 32 calls, so we're a dollar plus in the money already on our calls. And when we get up to the 35 area, we probably look to take our nice gains on that one. RSI, nice uptrend. We got a positive MACD cross today on the QQQs. Stochastic starting to move into an uptrend. Unbalanced volume, the buyers are starting to come in. So the ETFs and the indices look really, really good. Stocks still look like crap. Small cap stocks are just getting decimated and shorted to death right now. Case in point, let's take a look at FTWR as an example of what I'm talking about. 1, 2, 3, 4 days we've gone from $1, actually 5 days, we've gone from $1.38 to 45 cents on no news over the last 5 days. This is multi-year support that this stock broke, and then it's just gone straight down with a large ask, walking it down. This is typical of stocks all over the spectrum under $2. $2 stocks are becoming $1 stock. $1 stocks are going to 50, 60, 70 cents. Until we see a couple of stocks like this run big time, Zoom, we're going to stick to ETFs and large caps for now, and call options. That's where all the action is. That's where all the movement is. Stocks like this, while very attractive and really oversold, are just money traps right now. Still, there are a few promising prospects out there. FNSR looks to have a bottom in place right now. Target is a move back to $1 on this one. This one has been decimated over the last month or so and looks like it's finally ready to move back up. This company has an EPS, so these guys actually, I think they have a PE of like 4 right now. Ridiculous. ELN, nice move up today. It's right at a breakout point. $10 should set this one free for about a 12 to 13% move. Biogen reports its earnings tomorrow. All eyes are going to be on what the Tasabri numbers are. If we get any bullish indication out of that, Elon could be off to the races. RSI is building nicely. Stochastics looks ready to break out as well. So this one's looking pretty good near term. SIRF, we sent out a trading alert on this one at 115. Last few minutes of the day, it scooted up, hit a 127 high. Would look to add this one 115 to 120. Stops would be 105 to 108. These guys are rumored to be in the new Google Android phone, and that launches on Wednesday. So if these guys are in that phone, there'll probably be a press release on Wednesday from them. The move, I think we're starting to see the move. Momentum should pile into this one over the next day or so. Target on this one is a move back to the 20-day exponential. That's at 138. If we get Google news, this one's back up to 2. It won't take very much, so it's worth putting a little small, a small play on this one with possibly nice upside on the near term. That's it for the video tonight, but again, I'll say I'm pretty optimistic for the first time in quite a few weeks on the Dow, especially looking at that roadmap from back in 2001. We actually used that one back in August to call this market tank, so let's refer back to that chart for the subsequent bounce back. Things looking really good. If we see some follow through again tomorrow, shorts should start to get very worried here. The credit market is really starting to ease. We had the biggest daily drop in a couple of weeks on the LIBOR rate, dropped almost 1/3 of a percentage point today. Things are looking good out there. Fear is starting to abate. The shorts have no fear, and most traders are suspect of rallies. So that's the perfect environment. And it won't take much for us to get a 500 or 600 point rally out of this market in the next few days. So that's it for the video tonight. I'll see you guys in the chat room tomorrow. Good night.